Well, I think a lot of people are quite curious and obviously looking for yield right now, and they're curious where in the world to go look for that. Most people would be looking onshore firstly, but I think a lot of people are finding dividend yields to be hard to come by, even in this environment in the US. So some of the blue chip companies, some of the larger cap companies in the US are starting to, I would say, trade at somewhat unattractive dividend yields given perhaps their growth prospects. Instead, we are finding people coming to Asia, looking at Asia, given the higher dividend yields that we have there for the equities across the board. So you get a yield pickup by going to Asia, which is surprising to most investors, especially when they also can see that they've achieved, at least historically, much faster growth rates in that underlying dividend.
I think when financial advisors are first considering investing in the emerging markets or in dividends, I think among the key questions that they should be asking is what sort of a strategy the manager has in that area. Is it a quality-focused strategy, or is it a strategy that's really linked to sort of the leading companies in those sectors, just based on the index or such? I think there's a lot of risk to taking an index approach, particularly in the emerging markets, because you are investing in some sectors that really, over time, have not created value for shareholders. You're going to get that simply because they're large cap. I think it's important really to go in the emerging markets with a firm that's got a bottoms-up fundamental approach to investing and is picking better sectors and better businesses.
Dividend-paying strategies can play a good role in income investing. Today, if you do look at the fixed income market, you do have the 10-year Treasury sitting at 1.6%, very low yields. People are searching for yield out there. And dividend-paying strategies actually have very good yields with a call option on capital appreciation. So not only do you get that current income that people really need in this low interest rate environment, but you do get a call option on capital appreciation, hopefully generating a very good total return for our shareholders.
I guess the way emerging markets are likely to play out is I would expect really an extension of what has been happening. They are less dependent than they've ever been on the developed world. They are still highly dependent, and it's all the global economy obviously is very interconnected. But there's a lot of trade, for example, between China and Africa. You go back 10 years, that was not the case. That has all happened fairly recently. So I think I would expect economic leadership from some of these emerging markets. Which one's a winner? It's tough to tell. But structurally, the challenges are there for the developed markets, and they're much less so there for the emerging markets over the next 5 to 10 years.